Hey guys, it's Josh with Fancy Trades, and today I'm going to be showing you guys the best and easiest strategy in 2020. And some of you may know I like to short sell more than I go long, but this strategy is for anyone with a small account or a big account, and all it is dip buying. Dip buying is a very simple and easy strategy to do, and some of you guys may already be trying to dip buy, but I'm going to show you guys what I look for with my criteria and my indicators I use to show where I'm going to buy and exit the stock. So if you guys are having some trouble dip buying already, this might be useful to you. And so yeah, let's get right into it. Alright guys, we're going to get into the dip buy strategy right now. So there's two stocks that I'm going to be showing you guys. AAL, which was kind of a morning panic dip buy, and there's actually a failed one. So here's an example of like where to get out if you're wrong on the dip buy. And then also the CARV was one that was later in the afternoon, but was another perfect one. So these two ones are great examples of dip buying, and there is a lot to learn on like these two stocks, right? One had a huge massive dip at open, and you could have had a tiny gain, but eventually it did fail. It did go lower than where it bounced at. So that's a good reason where to keep your stop losses. Keep your stop losses like very, very tight. I'll show you guys right now. So like let's say it jumped down from 1780 all the way to like 1680. Let's say you bought this down here because the indicators that I use is the EMA 20 and then also the RSI. So on this one, it went straight oversold in the RSI, right? It was down in like 20 area, and it had a small bounce. You could have grabbed it like 1670 and sold it at 17, but this was a failed dip buy. I mean, you could have made money if you were very quick with it and got a couple 20 cents, 30 cents. But eventually, let's say you did buy it at 1670 right here on the dip, very far in the RSI, and I always will put a stop loss on right below where the low is on the dip. So like the RSI starts going back up into like the 30 area, and it looks like it's about to fail and it's not going to keep going. It looks very weak. I'll have that stop loss right below, let's say 1660, right below where 1665, where the very low was. So you would get stopped out right there and not take that another 60-cent fall. And then you had another opportunity here in the RSI where it hit 20, and this was the true bounce, right? It dropped from almost $18 to $16 within half an hour. So that would have been the great dip buy bounce, like the dip buy right here at the 16, anywhere to 1610, 1620 if you wanted to. And you could sell. I always sell at the 5-minute EMA. I like to take my profits, and I had just had really good trades of selling at the 5-minute EMA when it comes back up, because a lot of times it pushes it back down. But in this one, American Airlines, it went all the way back up to almost where it was at open. So I missed a whole big chunk of the move, but that's okay because I took a nice gain from like 16 to like 1640, 1650, wherever I sold it. I took a small gain, but I take constant gains all the time, and that's all that matters when trading. Take your constant profits. You always want to take the small gains and not the big home runs, right? So if you guys aren't using the RSI, that is a big thing to be using. I know some people say that they don't like to use indicators, but for me, the RSI and the EMA have been very, very helpful. They're not always 100% right, like the fail dip buy at this morning, the first 15 minutes. It was still super weak. I think this was when the Dow dumped super hard. But yeah, so don't always rely on the indicators, but they are very helpful and very useful to get, because you could try to dip buy like if you at open and saw the first 5 minutes dip down to 40 cents, you could be like, oh, okay, well great, it dipped down a lot, but it wasn't low enough in the RSI yet. It was probably still at like 30, right? You watch another one dip down, it gets down to like 28, 24, and then this last one gets into the blue, to the oversold. All right, so that's basically it on AAL, and I'm gonna show you guys the next one, which is CARV. Alright guys, this is the next stock that we're going to be looking at. It is CARV, and this was another perfect dip buy opportunity. Unlike the last one, AAL, this one happened in the afternoon, so it's an afternoon dip buy. but just as good. I mean, some people don't like to trade in the afternoon. I do. I like it. I still see a lot of opportunities come and go. So on this one, I already bubbled it out where like the buying opportunity was, where it started consolidating, and it was far blue in the RSI. If you can see in the very bottom here, and I didn't see this, and I didn't get the dip buy on this one. This was a couple days ago, 2 days ago, or something like that. So on this one, you would see it on it is so far the RSI like 20, 23, whatever it was right here. Yeah, 23, 24, and it starts consolidating, give you a couple green bars here and there. You could buy anywhere in there and have a stop loss right below the very last low of the wick. So like, let's say 910, 905. Have a very tight stop loss in case it keeps going down farther, right? And I always have my exit right where the 5-minute EMA is. That's usually where I like to sell. On this one, the candle went up so fast, went a little above it, so I probably would have sold it at like 13.30 and been out and been done with that, right? So this is just showing you where a good buy opportunity is, where when you watch the RSI, it gets super deep into the 5-minute candle chart, not the 1. And sometimes I'll look at the 10 to see how low it is, right? Because sometimes it'll get super far in the blue, but on the 10, it's still way up there. So it might go lower. The 5-minute might come up a bit and drop down again because the 10-minute is farther down. But I mainly use the 5-minute because I'm only in for a very short amount of time. You know, anywhere from a couple minutes to a half hour. That's about as long as I'll hold it for most of the time. So on this one, you could have had, you know, this was a good, but you could have had almost $3 to $4 gain on this one. This is a huge opportunity right here. And what you want to look for the stocks that are like the dip buy opportunity ones is anything with really high volume that's trading on like the top gainers of the day, any stuff like that. High volume, very active, very volatile, and you want the ones that dip far down. You could, like, let's say people are trying to buy the dip, but they don't have the indicators, right? They don't have RSI or anything like that. And they'll see it, they show it right here, go down from 16 to 14, right? And I'll see this little green candle. They're like, oh, perfect, dip buy opportunity. But I don't think they're really looking at, like, this is actually a descending triangle. It broke down right here. Like, I'll show you right now. So this huge triangle was forming, getting super tight. It eventually broke down. People could have thought, oh, this is a great dip buy opportunity, right? It had a nice little green candle. It's consolidating. But look how high it was in the RSI still around 40. It had so much room to go down. So you guys want to be careful about that. Some of you guys are losing from your dip buys because you just see any big fat red candle. This one's like $2 down. That's a huge percentage, right? But it wasn't enough. It wasn't oversold. It wasn't far enough down. You guys got to be patient with that. I would have been actually looking to short that as soon as I saw that breakdown, that triangle. It wasn't low on RSI. I would short that right away. But some people don't like to short or can't short, so dip buying is a great option for them. And what I'm trying to show you guys is just I wait for the 5-minute to get oversold and consolidate. Right here, it was a perfect spot. Consolidated way in the blue in the RSI, 23, 24. And then it shot right back up, almost $4 in 15 minutes, okay? I honestly don't even hold that longer. If I saw it shoot up $2 and hit that blue EMA, I would have been out, took my 20% gain. That's amazing, guys. 20% is great for a trade. So don't go for home runs, take the singles, and you guys, your account will grow so fast over time, you guys have no idea. That's basically it. If you guys have any questions, just leave a comment, or you guys can hit me up on my Twitter. It is FancyJGG. Also, leave a like and subscribe if you guys thought this was helpful and want to see more examples and more strategies. And like always, let's make some money, and I'll see you guys in the next one.